Good morning, everyone. It is December 23rd, and this is Morning Market Movers, where we do live analysis for day trading and take a look at potential hotspots in the markets for today. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple, Brian Caprice. We do have a few things that we want to talk to you about this morning. We want to go back over and just make sure everyone saw what happened with oil yesterday. With that, we told you yesterday. I want to do a quick review. We had that massive drawdown and oil price went up. So when we call out these events, there is volatility. Markets do move. So hopefully we're getting you to focus on the right places at the right time. We also are going to discuss the PCE, the Personal Consumption Expenditure Index, the price index that just came out, the Fed's preferred method of inflation. And we've increased another 0.5%. We've gone from 4.2% up to 4.7%. Inflation is back. We're going to take a peek at where that's impacting us, and then we're going to circle back around and take a look at what's going on, because that's going to impact the dollar, and particularly when we look at the pound. I think it's something that we want to take a look at, because there's some potential opportunity there. Before Brian and I jump into it and discuss those topics, I am going to share this disclaimer. We need to share this disclaimer because these sessions are all sponsored by our compliance department. Trading on Nadex involves risk. It may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. I mentioned a few things in there. I'm just going to show them quickly, and then I'm going to let Brian cover it. But number one, yesterday, we were expecting a forecast drawdown on U.S. oil inventory, and we were expecting a 2.75 million barrel drawdown. We actually got nearly 4.75 million drawdown. Big drawdown, oil, less supply, oil price went higher. The other thing we're going to be talking about is this number that just came out, the core PCE price index. It was forecast to come in at 4.5%. Previously, it was 4.2%. They revised that a little bit. We were expecting a little bit of an increase. We got nearly double the increase that was expected. We've got inflation rearing its head even more. And this is for us. This is the true retail personal consumption. What is it that people are buying specifically? And yeah, prices are going up, and we're seeing that in gold. So with that, I don't want to take up any more. I think it's a pretty good intro on what we want to cover, especially with oil and then gold, with supply and then inflation, and then we'll circle back at the big one that the pound set up later. So Brian, let me flip it over to you and let you run with it for a bit.
Sure. Yeah, I figured out what the transitory part was. If you look at the personal income, how much people are making, that's going backwards, but inflation's going higher. So it was the right word, but it was the wrong release.
Wrong noun.
Yes. Yeah. Because if you're looking at it's like, look, we had it was big. It kept being green numbers in like July, August, then October got low, and then October was negative, and then it was up just a little bit, 0.5, and then we're back down again. So yeah, it's how much money we're making is going down. That's what it is. There's the transitory, the up and the down
part.
You got it.
Okay, so then. Not
there
really.
We go.
Yikes.
Yeah. So yeah, as you mentioned, yesterday was a big surprise. Now we had the API number that came in quite high as well. This actually 2 weeks in a row now. If you're looking at this, 2 weeks in a row now, it came in much, much higher of a down draw in there, which is interesting because we've been continuing to see oil prices drop, yet we're having this big down draw. And again, I mentioned yesterday, in 1 week, we went through almost 10% of that, increased, when we released the, strategic oil reserve, the 50 million barrels. It basically now in 2 weeks, we're up, 20, almost 20% of that in just 2 weeks. So question is, this is not a resource that we can tap again and again and again and again. It's there for a purpose. Releasing it in emergencies is great, but if we're going through it this fast, we're going to need to make that call again that, hey, listen, we need some more oil here, or something else is going to have to be done. So oil yesterday basically went straight up. If you guys were following the 35-1, there was a short at the actual release. Okay, it went all the way down. It actually made it to a 2.8. It almost made it to a 3, but there's actually some buyers in there, so it was a great little sell in, or a great little short right at the number. And then after that, once it hit that level of buyers, it just took off, and it was a huge day. You can see, I mean, there's 2 days in a row of very, very big movement. We mentioned a lot of times in the U.S. session is where we tend to see oil prices going higher. Really 3 days in a row. I mean, we had the big drop down here on the 20th, but then boom, skyrocketed higher. Yesterday was a big move, really from, I guess from the open up. It was just $2 just in our session. You can see the Europeans didn't do much with it. And same thing, Europeans kind of had us, pushed us here, and now we're holding back up at this level. What is it, $73? And we mentioned 73 is what we expected by the end of the week. Now, 73 has had some sellers. We've had selling here, we've had selling here, we've had selling here. It's hit it a few times. Any other time, I'd be like, yeah, it's a great level to short off of. But again, we've hit it here, we've hit it here, we've hit it here.
Charm.
Yeah, and this most recent time, we started the base through it, so there was really having no reaction from it. And then again, kind of got pushed down for the Europeans. Again, when you want to buy something, you can make it on sale. Kind of went down and then pushed back, and they're in that same level. So the reality is, I wouldn't say that this is the highest quality area to be taking a short. Why? Because it's hit it so many times. There can't be that many sellers up here at 73. Trust me, OPEC is not selling it at 73. Like, 80 is probably more stable for this market. That would make it a much healthier market. So they're not going to stop it, from here. And low volatility right now. I mean, if you think about it, the big traders are pretty much out at this point. I mean, there's no big traders left in the market, 2 days before Christmas. So, I'd like to say look for a pullback in here, but it's one I just want to be very, very leery about. It's very reminiscent of what the pound is doing. I mean, the pound rates interest rates, and each day now it just keeps grinding higher and grinding higher and grinding higher because of that fundamental change in the interest rate environment. There is some news that we will get today that also could provide the opportunity for maybe a short. I found this a little while ago that later on today in the UK they're gonna basically make this, publish this first study, and one of the commentators in there actually was talking about a report that came out from, I guess it's a WHO, saying talking about Omicron, how basically it's in 89 countries. The number of cases are doubling every 1.5 to 3 days in regions where it is transmitted through the community, not merely from abroad. And I'm kind of thinking about it. I got another phone call last night. I have another player now that was in close proximity and tested positive for COVID at school. So we've canceled practice for the rest of the year, but it's kind of strange. I went almost 2 years and I had 1, maybe 2 kids that had some exposure. And now I have 3 or 4 kids that have it on the team, all in the last week. Close contact at school, and bam, they got it. My son, thankfully, he had
easily transmissible, and we're seeing that.
Yeah, and it says that down here. It says, according to the UN Health Agency, Omicron's substantial growth advantage over the Delta variant means it is likely to soon overtake Delta as the dominant form of the virus in countries where the new variant is spreading locally. Now, I know in the United States they've said that now 73% of cases are Omicron. I guess it's already spreading here locally. We're kind of ahead of the curve, but we're going to get data from the UK. So that actually may help kind of pare it back a little bit. Again, any blockbuster, big country that's going to, announce something like that about what the severity of it is, if it's going to be good or bad. If it is bad, that should kind of hurt this a little bit and maybe temper it down a little bit. But it's one of those things with no real institutional traders out there in the market on the 23rd. It's one of those ones that it's great that it's continuing to rise. Again, we're seeing the big down draws in it. And again, that's why price continues to run up. But again, I don't know officially how many weeks it would take us to absorb that full 50 million, but it looks like the impact is already in, and it looks like we're going back in the other direction.
Yeah, we're heading higher. And remember, the markets are closed tomorrow. Tomorrow is officially a holiday. So
yeah. I mean, we started the week at 66 and we're at 73 already. So it's been kind of a big rally week, for oil. But again, it has been here for a while. I mean, it started off December here. So, we're back up to levels. We know we got levels up in the, you can see we have some levels up in the 73, 73, 70-ish range, up near 74. I'd be very cautious of this one today. And again, PCE, we know a lot of that does come back down to this. And again, if we've basically re-rallied, and PCE is continuing to rise, that 50 million strategic reserve is not really helping us that much. So I think it's important to note. And again, jumping across to the PCE number, again, it's not just a PCE number here as well. it's PCE what we're paying. It's durable good orders. And again, orders are going higher. Consumer confidence yesterday was also higher. Now, these are great signs for the overall indices. That's probably why
People
we
are
got a bit
buying
of a
stuff.
rally.
Yeah.
Yeah, and again, the orders are coming in. This is showing that demand. But at the same time, all these orders are coming in. Prices are continuing, which makes sense. Prices are continuing to rise. So far, the market was like, yeah, whatever. You know, you're going to go slow with this interest rate rising. We're going to play this as long as we possibly can. So it's interesting that we're seeing the income and spending a little bit less than it was before. Unemployment claims rose slightly, but yet manufacturing goods and durable goods are starting to crank through again. The question is, are these durable goods and these core durable goods here, is this increase in preparation for this story?
Well, by
That's
the
the
way,
question that I have.
so here's what I've got. I just want to go back to this real quickly because I'm just looking at as I get a chance to digest all the numbers that just came out. You know what? Price index jumping above forecasts. We've got the year over year. So the PCE price, the core index is up, the price index is up because that's going to include a little bit more than just the core. I know they add a few more items, but their numbers going higher. Meanwhile, personal income dropping 0.5% down to 0.4%, and personal spending, even though the orders are coming in, the personal spending also dropping.
Yep.
It's interesting how the prices in the markets for oil, and then we're going to take a look at what happened to gold here on the inflation. Prices are definitely going higher. People are still ordering durable goods.
Yeah.
The question is, how long are going to be people be able to do that when personal income is declining, personal spending, and prices keep going up?
Yeah,
You
and
can't
that
keep doing
I
that.
would say core and durable both went up substantially higher. And again, those were nice size surprises in there. And again, that's what I'm saying. The factory orders, like the orders out there, that's kind of what they expect to happen in the future. Income and spending is what has already happened, and that's kind of where there's the not disagreement, but that's where kind of
I'll
one is
trade.
foreshadowing the future. Yeah, one is what's already happened, and PC is where we're already at. So, and again, that's being higher. Like I'm saying, I got a very, very weird email from the superintendent, not in regards to my kids, but talking about how make sure everybody brings their Chromebooks home. I'm instructing teachers to start working on a virtual curriculum just in case we need to use it. Right now, we have absolutely no plans unless we're forced to do it. We're like, huh? That was kind of a weird message, but make sure you have your Chromebooks home in case we need to go virtual.
Right.
Statements like that, locking back down again, that's going to make, and I'll tell you right now, my wife went to Sam's Club yesterday, no toilet paper. It's coming back again, So if people are looking at this and saying, oh my God, all the kids are spreading COVID now, everybody's got it. And the school system's like, well, if they're asymptomatic, they can come back 2 days later. It's like, well, what about all the adults at home? They can still get it. So everything's starting to get very, very weird with this. And especially in low volume times, gold right now, gold, we talked about 1800. And again, we were bouncing off that 1800 number. You can see gold is extremely, again, hairy, right? It's got a lot of wicks and very, very little bodies. It spikes and then gets lost, and then spikes and then gets lost again. It is approaching this 1815-ish level. There is some selling coming on around 1812, 1811.
Yeah, and
you may look at this and say, well, why isn't this bursting? Why isn't this all the way up here? Inflation's higher. Yes, it is. It should technically be a little bit higher. But the problem is we're not at the start of building inflation. We're at the end of the building inflation where they're going to start crushing it back down again. If this was, say, July and we got these numbers when there was a lot of institutional traders out there, this would have been much more of a move. The reason why we're not seeing the same type of move is because, again, we're in the last 7 days of the year. All the institutional money, all the hedge funds, they're out. They're done. They've locked their books down before the volatility of Christmas time comes in. That's why we're seeing a muted kind of, muted pullback here. So it's important to understand the time of year that you're in. If we get this same reading next month, you'll see more of a bounce. But the question is now, how fast? Again, we know the taper is going to be going quick, and they're going to start crushing inflation. So, if you start hedging, gold, and you're trying to get into it, and you're trying to raise the price up just to kind of get it, the crushing effect, you're going to basically get in at the wrong time. You're getting in at the high, not at the low where you typically want to get in. So gold is great when you're getting in, and this is one of those things, at least for wealth managers, it's good to diversify it all the time. Even with today's PCE, You can see even crypto over here is and had a little bit of a pop and pullback again. And crypto, in general, Bitcoin, that has been the one that has been, oh, there's inflation, send it to Bitcoin because we can't trust the Fed. It's not even moving over here. And then again, looking it out at TLT, what did TLT do? TLT gapped down. Right?
Yeah.
It's gapping down for the open. Typically, when you're seeing things like that, it's like, oh my God, inflation is bad. They're going to crush the overall indices. Bonds should be going up because people are going to be taking money out of the risky assets. It's going over to the safe side, and they're not. It's the opposite. And right now, we're seeing in the futures markets.
Yeah, equity's all in the green.
Yeah, I mean, VIX right now is technically green by 0.5%. You're seeing it starting to rally. It really didn't do much. It's a little bit higher than where we closed. And with the news today, I mean, on what? I mean, durable good orders were great. It's great that people are buying things. They're not looking at these little numbers. Unemployment claims, okay, 5,000 more unemployment claims came in. Who cares?
Nothing. Yeah.
It's the durable goods orders saying, wait, they're putting orders in. We need to produce more. That's great for the economy. And overall, that tends to be a pretty good thing for the VIX, for the regular economy. So minus a big headline, as long as that VIX stays positive today, it should be a decent day. Now, again, yesterday, I mean, there was pullbacks. We had a pullback at this level. We never got a base. We mentioned it in the ES. It's up at a level right now at 4,700. We know it's a psychological level. If it pulls back from here, makes complete sense. It's already actually done a little bit of a pullback in the last little while here. You can see that it just pulled back to prepare itself. NQ is kind of flat right now on the 15, but Tesla up 7.5% yesterday. Tesla's pulling back kind of where it closed. I mean, looks good, right? Apple also high and really kind of just pulling back and going higher. So again, no bad news on those two fronts. They typically tend to drive the NQ. The NQ is the weakest right now, right? YM also rallying up. And we talked about a little Harry Potter. We got the little Harry Potter yesterday off the 35,552. We're approaching the 35,800, which I said we'd probably hit this week. We're pretty close, and it looks like today, again, we had a European pullback. And now at the 8:30, 9 o'clock, when U.S. traders are getting in, it looks like we're trying to form that rally. And again, it did pull right off of a little zone right
that
there.
Santa Claus rally in. So
yeah,
maybe we'll still
and
get
Russell.
that.
And Russell's off to the races. Russell's up 0.5. Russell's the strongest, which it should be. Again, we were talking about sells up here yesterday at 22.20. It did. It kind of hit it at 1 o'clock and dropped right back down again, and then came back up again and tagged it again and started basing on that level, which, again, telltale sign. And there was your little confirmation as it breaks through the top, gives us a little space, pulls back, and then started to rally up higher again. So I'd say right now everything looks pretty good. Natural gas is the only major mover, down 4.5% from yesterday. We did get the entry. It didn't quite get the profit, and now it's basically just pulling back. And again, what is it, 19 degrees in Chicago, you said?
Yeah, yeah. Well, we're going to get a little bit warmer. We're going to get all the way up back around 30, but it's going to rain.
There you go,
so
30. We don't need natural gas anymore. Yeah, that's shorts weather for you guys in Chicago, right?
Hey, by the way, we mentioned the pound at the beginning. We're seeing some pound strength after all this. Can we just do a wrap up
I would say. Yeah, currency-wise, I would say the only things to watch out for is dollar CAD. Again, that was an oil thing from yesterday. We talked about the original Harry Potter, and then we had the original one, the one set from, on Monday? That one also triggered, came down based and entered, and it went to full profit target just a little while ago. So there was two in there. Again, oil strength coming back in. The pound is kind of up in an area right now. It is pushed, and actually, let me go back up to, I'll go to 4 hour to see this one. Here has been the run in the pound, okay? If you don't know what this is when they raised the interest rates. Now, we did push up. We had a little zone, and we did get a pullback from that selling. But then we knew we were in a racetrack. It has rallied all the way up, and now on a 4 hour basis, it is tagging the top here. So this is an important level. It's pushed all the way back up again, right? And it's starting to roll a little bit. Pound dollar, exact same thing. You may wonder, well, wait a second. Why is that rolling back again? Again, the PCE data. That's strong for the dollar. European session did nothing. And again, here, I'll mark the European session off. There to 8:30, that's the European session. So you can see pound dollar basically just straight up. Again, all that pound strength coming in. Now it's time for profit taking and for the U.S. trader to get in on very positive PCE data, as well as, if we pull this back up to, was it a 2 hour? Yeah, 2 hour. You can see when we come across right in this level right here is really the last time we had a very, very strong push down. If I push that all the way across, you can see that's exactly what we're bouncing off of. So again, another potential reversal level in there. And again, in the pound. But this is what happens. You raise interest rates, nobody else does it. It just continues to slowly grind higher, grind higher, grind higher. Why? Higher interest rates are very attractive to send money to. So we'll see if this messes it up a little bit today. But I'm assuming right now, if it goes with all the data we've seen, it should be okay. And again, that will not necessarily. It won't help the pound, but it won't hurt the pound, I guess is what I'm trying to say.
Right. So, yeah, and as more data comes in, clearly as people become a little bit more comfortable with what Omicron's actually going to mean.
Yeah.
But again, more data just simply needs to be out there. People need to get it, assimilate the information, and become comfortable with it. So it's still going to
Yep.
take some time.
And
All
I
right.
want to add one last thing because this is our last
Yes.
broadcast of the year. And again, we
Well,
will be on
no,
next
it's
week.
not.
No, yeah, we'll be on next week. You're right. You're right. I
We'll be
forgot.
next
My
week.
bad.
It'll be the last
We'll be here
broadcast
next week
before Christmas.
before Christmas. But it's the last one of this week. I just want to
Yes.
point out, guys, we talk about setting trades at the beginning of the week. And after the last broadcast, when we talked about call spreads and things like that, there was a student out there, I guess not necessarily a student of mine, but it's a watcher of the show, ask if we could start setting up weekly positions. One of the things I wanted to point out, particularly with the pound dollar, this was a larger time frame level. And this is how I'm using my 4-hour and daily levels. Typically, with currencies, you can find them on the 4-hour. This is Monday morning at 3 o'clock in the morning. This was the start of the week for the UK. We knew that they had great data. We knew that the interest rate situation was in. I just want to point out that this is a move of 270 pips for the week. We talk about those weekly trades and how to trade call spreads and how to trade knockouts. This is the picture perfect week for knockouts and call spreads for some of those longer duration traders. The only difference of what you're doing is instead of using the 30-minute time frames that I look at during these to find what's hottest for today, you're using these larger time frames like a 4-hour or a daily. And again, this is a level on a larger time frame that we knew had buyers stepping in. This is where you can take something like a call spread or a knockout and just ride it for the week. And again, 270 pips high. That's a great week. You could close it out now, close it out later, wait till it expires later on today. But this is how you trade it. It's the same exact analysis that we do on every chart. You just do it on the on the larger time frame, starting with the 4-hour. That's it. That's all I got. There's my Christmas present.
All right. Thank you for that, Brian. All right. With that, any questions for Nadex, please email us customerservice@nadex.com. If you'd like to email Brian, you can email Brian at support@keeptradingsimple.com. We did kind of cover quite a bit today, but we reviewed the oil inventory, big drawdown yesterday, oil running all the way back up to $73 a barrel. We had our PCE, personal consumption expenditure price index numbers, both the base and the core numbers. We've got inflation. We're seeing the inflation. That is, again, the Fed's rumored to be the Fed's preferred inflation mechanism. We see it. The Fed's going to have to do something about inflation. They've already told us that. We're seeing it continue to tick higher. And Brian and I will be back next week. So even though we had anticipated taking next week off, we're going to be around. Plans change. So I know that yesterday a good chunk of you said, if we go, you'll join. So we're going to go ahead and get up and get on, even though we're still trying to take a little bit of personal time and vacation time, if that's what you can call it, some downtime, because things will get really busy next year. But going into that last week of the year, we want to be here for you. So we will catch you next week. With that, good luck in the markets, everyone, and Merry Christmas. I hope everyone has a safe holiday and enjoys some time for the holiday with your friends and family. We'll catch you.
And don't forget, Santa likes the alcoholic beverages too.
I think Santa might prefer those.
some eggnog, some eggnog instead of regular milk.
Spike the milk. And
Exactly.
hey, feel free to put something in the cookies.
Hey, in this day and age, we need something. If it battles Omicron, I'm in.
Santa's little helper. All right. All right, everyone. Thank you. Good luck in the markets. We'll catch you on Monday.